Alrighty, so this is kind of one setup for life, as well as a trade plan I've used for a pretty long time, and over time I refined it. And so we're gonna go over it really quick, and it's something I trade pretty much almost every day. That doesn't mean it is applicable every day. It just that means I look for these sort of setups almost every day, and we're gonna kind of go A to Z through everything. Just so, I mean, I don't know if anyone's gonna end up watching this, but it's kind of a journal for me, as well as a channel just to kind of see my growth as time goes on. And then occasionally there's one or two people that watch it, but if you're one of those two people or three people that watch it, and this is the trade plan. This is how I kind of learned from completely A to Z. So these little boxes on my screen are called fair value gaps, imbalances, inefficiencies, whatever. You probably heard a lot of this term coined across a whole trading space. A lot of people trade them, some people don't, some people love them, some people hate them. It's just what I do. It's what works for me. And so this is kind of how I made my trade plan based on this. And so really quickly, in order to draw my zones in the boxes that you're going to see on the screen like this, you're going to need to first understand why I draw the box around the certain candles that I do, as well as how you can if you ever end up trading this. So really quickly, this green box and this red box, they're both in balances. I've color coordinated them so they're easier for you to understand and see. Green means up, red means down. So knowing that, if you were to basically draw the blue box on the candle, you would see something like this. You see a candle with an imbalance here and an imbalance here. And the way I draw my zones are if I see a whole bunch of imbalances, I will use the bottom candle as my zone. And so on this kind of like example here, it would just be the bottom candle, which is this black candle. As you can see, this would be my zone. Um, and for this example, we have a green imbalance right here. So my zone would be the candle underneath it, which is here. And then imbalance, candle underneath it here. Imbalance, candle underneath it here. So that would look something like this. And that's how I draw my zones and look for entries inside of them or just on the zone itself. And the exact thing is applied like in the other direction. Red. So we took the buy zones at the bottom, so now the sell zones are going to be at the top. The sell zones would be this candle at the top right here because there's a imbalance. So I would just mark out the candle there as well as here. Um, and so the boxes are as shown. Very simple in my opinion to kind of draw these boxes. And so in tandem with drawing the zones, I will mark them out on a higher time frame to get a better picture of the overall market. And then I will try to confirm them with a lower time frame. And so for this example, it's pretty straightforward. I marked out a zone on the 10-minute. You can see on the 15-minute, this is the whole entire zone. But if you switch to the 10-minute, the zone gets a little bit smaller. And so that's just kind of how I refine it. Because I don't want to take a huge zone and potentially get faked out when the trade kind of goes in my favor, and then I'll take a loss, and then I'll take another loss, and then I could be wrong entirely. So I avoid unnecessary losses by doing this. And so we then wait for price to go into the zone. And what I'm looking for is a few things. I'm looking for a sell zone on the 1 minute to get taken out. And by that I mean we draw a sell zone and then we touch our POI right here. And then we pull up, we see this, and sometimes it pushes off and then we'll just break through. And so ideally we want to get an entry somewhere here to anticipate the longer term move. And so really simply, I just waited for this to happen. You go inside the zone here. Let's go on the 1 minute to look at price. And what you can see right now is we sold, came up, sold again. And so my current zone that I have right here is this one, the sell zone. Let's make this red so it's a little easier. So ideally in a bearish market structure, we print lower lows and lower highs. And so if this zone, big blue zone, were to fail, we're probably going to just continue seeing that. And so if we potentially see buyers take over right here and then push up through it, you could get a trade. And so I see this, we tapped into the zone right here, and here's the push off right here, and then nothing happens. And then immediately once we trade through the zone, you could take your entry like this off the zone, and then you can cover the low and target either the highs up here or these highs right here. You could target these, or you can go for a static risk to reward, like a 1-to-1. It's merely up to you and something you got to back test. And the other idea is usually take half position here. I'll enter half my position size, as well as then draw a buy zone right here, and then enter the other half right here. And so for this trade, I usually get my stop loss right here. I'll take a look at the 2-minute just to see what it would be. And so the 2-minute would end up looking like this. So my stop loss would kind of go underneath the 2-minute. And so this could be one entry, and then you could have another limit set right here to get a better entry, and you could scale in your pole position here. And so a 1-to-1 would be here, but if you get that better entry, it ends up being like a 1-to-2.5. And so I would have these two limits set, and then I would be trading in the overall direction. At opposing sell zones like this, right here, you can take profit or go break even or whatever. But that's merely up to you. And so the first trade would be this. It's based on market structure bearish, and then we tap into the zone right here, and we fail to continue. We can clearly see there's wicks that are barely taking out the low. We're not closing underneath the low like right here. We're not closing underneath the lows like right here. We're not closing it underneath the lows like right there. We're wicking, which shows kind of like buyers stepping in. They're basically buying back the candle. And entries would be like this, and there you go. I'm just going to do 1-to-1 just to make it simple, but this is an entry you could have taken last week. Your trade would be like this, and then you would have hit your 1-to-1 right here, as well as you would have got tapped in right here. And so the reason I used this candle right here instead of this one that's right here is if you go on the 2-minute, the full entire candle is this. And so I know on a higher time frame, the overall zone could potentially just tap this high wick. Because if you look at it, candle pushed up, retraced, and then continued. And so my zone would be this portion. And that portion starts at this wick instead of just this candle. If you wanted a better entry, you could potentially have missed this. If you wanted to just take this candle right here and made it smaller, you would have made more money if you got tapped into both. But because of this, you missed the second opportunity, which is right here. And I mean, again, you can target these highs, you can target these highs, but just for the sake of the video, I'm going to just target 1-to-1 to make things easier. And so there would be your trade. I actually don't know. Yeah, we do end up taking out the highs, but this is a very simple thing. And when it comes to these 5, 10 minute, 15-minute zones, you see the overall zone right here. This is the overall zone. This doesn't happen all the time, but sometimes you can end up getting like a 1 or 2 minute refinement if you follow these candles down. We follow the candle down here. There could have been a zone right here, but because it's above the zone, I really don't like it. But the other zone was right here. And we see we tapped that perfectly, and the last one was down here. And obviously we didn't get down there, so it doesn't really matter. You can kind of use this as extra confluence, or you can enter earlier if you'd like, if you're super confident in the trade. But just for my sake, I like to see a break of bearish zones, as well as sometimes a break of the structure like this. And then we break, and then you could have entered later here. But because I like to enter early, this is the trade that you could have taken. And so simply here is another example. We have a 15-minute zone right here. Could refine it, but because if you look at where price is, this is the whole down move. The zone is relatively small compared to it. It's not like before where the range that we were trading is here and then the zone is like this big. We're trading this whole entire range right here from this high all the way down to this low. And this would be the 15-minute zone that I would take. And same exact thing, we're looking for a buy zone. Because we're trying to take a sell, we're looking for a buy zone to get invalidated right here, trade through it, or we're looking for a breakdown. So very simply, we play price on the 1 minute. We go up here, we tap it. Immediately, like I said before, we're not breaking this with any strength. You can see like when we broke above this high, we had strength, we came back, buy zone, we continued. But right here, we broke above it, we tapped into our POI that we were looking to sell from, and you can see there's no strength above this high or above this high, basically showing that sellers are getting kind of in control, at least on this time frame. And so what I'm looking for at this point, because we have no bullish zone, at least on the 1 minute, maybe if we go down to like a 30-second, you can see something if it does let me. No, even on the 30-second, there's nothing. But we tap into the zone. We're looking for a break beneath this low at the very least because we have no buy zone. Do we get the break? We do get the break below it. And at this point, all we have is this zone right here to sell off of. We'll change this bigger color right here. It's something else, so it's a little easier to understand. And so we're looking to then sell here. So our limit would be placed right here, like this, 1 or 2 ticks above, just for spread and whatnot. And then just for easy sake, we're just going to target a 1-to-1. Price then pushes up, taps us, and within that one candle, we're hitting our take profit. And then so eventually you'll get better at knowing where to take profit. You could take beneath these lows right here. You could take them at a static like 1-to-2. It really matters, and it's kind of based on context and not so much RR. So don't always just trade a 1-to-2 because you want to trade a 1-to-2. It isn't necessarily the most profitable. Sometimes a 1-to-1 is more profitable than a 1-to-2. You have to figure that out by yourself. And so we get tapped in. We could take profit beneath the lows. And we can see we're continuing to tap the sell zone right here. There's a sell zone here. Change this to red. Sell zone there, as well as sell zone here. And we're just overall continuing to tap them over and over. Continue to play price. And then price kind of hesitates here. And so this would be a good time to take profit. I mean, obviously I know what happens, but here's another sell zone right here. And so ideally, what you would expect is this to trade up into here and then continue and break the lows, continue down. And so immediately when it trades back into it, I kind of get my red flags and I would most likely take my profit here because we're not continuing down. And so what you see is we don't continue down, but we print a buy zone right here. And then what ends up happening is we respect it and then we go through the sell zone. So that'd be an immediate take profit. And if you have other time frames, you'll probably, when we take a look at this, there's a 1 minute buy zone right here. So knowing, just being able to look at price, I can zoom out, change the time frame, and then overall there was this 3 minute zone right here. So a great rule of thumb is to just take profit here. And so then we're trading in completely in the opposite direction because this got respected. So I'm going to show you another example in a second. But overall, I mean, if you enter this super early, this is at least like a 1-to-10. I mean, whether you're going to take it all the way there is kind of up to you. I aim for lower RR for prop firms and stuff like that. 1-to-7, sorry. But you kind of get the gist of it all. All right, so very simply, I just drew the zone like here. There is an imbalance. I drew the candle up here. So we're looking for price to go into this, fail to take out a high, break a bullish zone, and then break structure if there's no bullish zone. And so what we see is here's the zone, go in the 1 minute, and then you can kind of figure out what's going on here. All right, so here's our bullish zone right here. And so we want to see how price reacts. Creates another one. So we're continuing to go bullish inside the sell zone. We have no confirmation to go sell. Continuing again, even higher up. And so what ends up happening is we tap into this zone. And so now what I'm saying is I'm trying to see if there's follow through above this high, meaning I want to see a clean push up because then this makes me avoid the trade. If there's some hesitation up here and then a break or something like along those lines, then I'll look to sell. But I want to see this high get either taken out or not respected enough. All right, so this is so far a good sign, but you can see the next candle, we end up pushing right through it, so it doesn't really do anything for me. Continue. And then so right here, then we start to see sellers come in. You can see by this huge impulsive candle, you draw your buy zone out like this. And we took it out. You could say that the wick respected it, but I use wicks as breaks for this sort of thing. And so theoretically, if you wanted to enter based on that candle right there, you can enter with your stop loss above the high, target 1-to-1, target opposing zones like this, or whatever the way you want to do it. And then so half of my position would be scaled in here, as well as the other half of my position would be scaled here. I'd move my stop loss down here really quickly just to make sense because this is the zone. If it does break past this, I don't think it's going to hold. You go on the 2 minute and yeah, it's relatively the same zone if you take a look at that. So there's my entry. If we do end up getting a retest, we're going to get better RR on the other half of the position. So we're going to take it like this, and then we're going to target the same exact target. And not all the time does it come up here and retest. Sometimes it will just drop and you'll get your initial TP, but sometimes it does retest. So you take a look at this, comes back up. We're entered in both trades now, and you can see the crazy candle that we got. And we can see, we make sure, like, look at this. Look at the precision of this. Look at exactly where it hit. It hit this because on the 2 or 3 minute, take a look at that on the 2 minute, this is the overall zone that it tapped. If you think about this, this is a wick, next candle is down. So this is the push down before an impulse move up. Take a look at that, and then the overall zone would be this. And you can see it did react here. Whether, I mean, you can see it also continues, but there was a reaction here at somewhat. And so this would be your trade. You'd be following the 15-minute. This would be another textbook trade. You did end up getting the retest, so you ended up making probably on average like 2-3R on this. If you average the 2 or 3 or 4R. And so we're going to be on to the next one. Okay, so here's another trade. Very simple. Market open. Here's a 15-minute zone. You can see us print a bullish zone here, so I'm going to just mark this out really quickly. There you go. Here's the sell zone. We're taking a lot of shorts, but we tap into the zone, and then we go on the 1 minute. I can see what we're going to dive in and see what we're doing. All right, buy zone here. Let's mark it up. Green. We tap our POI, so I either want to see no follow through, a sell zone, and then take the sell zone, or I want to see a break of this zone, or a break of structure, but the break of structure would be all the way down here, so I'm going to just use the zone. Break the high. You can see there's wicks, not a ton of follow through. If there was follow through, it would be something like this, where we just push right through it like it doesn't exist. In the POI still, you can see another buy zone right here. The minute this buy zone gets taken out, you can enter a short. It got taken out right here, so my short position immediately would be right here. Cover the high of the zone, or the high just because it's pretty close. And then realistically, you could use this part at the bottom as the target because this is a 15-minute bullish zone. So if there is a reaction, it should be around here. You can also take a TP right here or a trim right here because it could react, push down, tap into here, and then maybe continue, or it pushes down right here and then it will reverse. So immediately here's the first position. Second position, like you remember, would be this zone, sell zone right here. And then you take your position like this. And so you'd have 2 trades on, or at least this is the way I do it. And then your trade would be something like this, targeting the same thing. And this trade ends up being almost a 9R trade. You can see it doesn't tap me in. So this trade would most likely get deleted if it doesn't end up coming all the way back. I don't remember. But this trade is done. See, there was a reaction from the buy zone right here. You could have taken your TP here, or you could wait to lower, because overall the trend should say that we should go to at least here or the lows underneath. And so you keep holding the trade, and what ends up happening is after hours we get this crazy wick up, and then we hit our TP of 4.1R. For my next trade, there is really good context, because if you take a look at this, here's a 15-minute zone, and realistically what you want to see from zones like this is you want to see push up, come back, and you want to see a strong aggressive push above the highs. Considering it's market open and New York tends to have reversals at like around 10 a.m. or the first like hour and a half, seeing us push up above this high right here and wick super heavy and then break down beneath this low shows that there's a shitload of sell pressure here. Okay, sorry about that. So we go on the 1 minute, we take a look at what's going on. We touch our zone. We push up higher. Here's our second zone. Change this color really quickly. And so what I want to see is us trade through this zone for our first entry. It's also considered a break. Next candle, boom, death candle. You also trade through this zone right here, which is perfect. So your first entry would be kind of a shitty RR. And then where would I cover? I would cover this zone up here. And then my next entry would be a sell off of this zone, as you remember. And your targets can be this right here, this zone. It could be this zone. It could be this zone. It could be the lows. It's up to you. You need a back test to figure out what is what. 2 trades like this, taking profit right here. And then we'll just play out this stuff. See, we immediately trade down here. There's a reaction right here, but it ends up going lower, and then we can see where this stops right here at this buy zone. Let's make this green. Let's make this green as well. And let me just go sideways for a second, and then we wick the low, but by then we're already hitting our TP. We didn't end up getting the retest that we wanted, but we do end up entering our first position right here. And then boom, hit your TP. Alrighty, so here's our next trade. We basically failed to break lower, push up. There's a pullback at this zone, and you can see we just are consolidating before open, and then we push down. We failed to continue. That shows that we're probably going to go bullish off of open. You can see where this wick tapped. It ended up tapping a buy zone right here, all the way to the left. That doesn't matter too much, but it's just kind of giving context to looking for buys. Because what ended up happening is here's a sell zone right here. We pushed into it, and then we respected the buy zone right here and didn't continue lower. So this gives bullish market intent off of open. If we zoom in right here, obviously you can see where the zone is and where price goes. But the first place I would look for to TP would probably be right here. If you do end up taking a long, let me just go on the 1 minute. And so you take a look at the zone versus the price right here. Look at how big this zone is compared to these candles. So if we go on the 10 minute, we can maybe refine it. Nope, it looks the same. You go on the 5 minute, and then we can get it a little bit smaller. 3 minute as well, we could probably refine it to there, but just for the sake of this video, I'm not going to go too in depth with that. And then I'm just going to take this right here. Let's go on the 1 minute, and let's see what happens. We barely missed this right up here. And what happens is we end up tapping the zone right here. We trade through this zone, wicking it. And so my entry at the very least would be this zone. Because if you take a look at this entry would be incredibly shitty compared to the risk to reward that we're probably going to get. So my entry would be here. This would be my zone to buy off of. We tapped in. We broke through this zone with the wicks. And so right here would be the zone. Make it green. Buy zone. Your risk to reward would only be probably a 1-to-1 at the very least. Yeah, ends up being a 1-to-1, and then we play out the trade. We tap into the trade, and then we tap our 1-to-1, and then our TP would be this, because on the 15 minute this is a sell zone. You could end up taking it above this high or these highs right here, or if you zoom out a little further, there's probably a zone up here. Maybe not. We just play out price. I don't know exactly what happens. But we end up wicking this high and then reversing, and then there was a potential trade right here. Following this, go on the 1 minute, like, let's see. So looking at this, it's very simply sell zone right here, tap into it. What happens is we tap into it, we get a rejection, but look at how shitty this response to this zone is. We should continue like this and then just continue if we're bearish. But right here is the shift between the buyers and sellers, and the buyers are taking over. And then you can see we then end up trading super high up into this zone. And at the very least, you probably get an entry right here because this is where we do it. There's no place to put our stop loss other than the low. Maybe go to a 2 minute. There's a better stop loss placement. Nope. There's no zone to kind of cover our stop loss. So this would be my trade. We could take it to a 1-to-1. We could take it to a 1 to whatever. Target this high maybe. Target this zone. Target this zone. It's clearly up to you. Let's play price. I go sideways a ton. There was a potential long entry right here. There's another long entry right here. If you took it up here without breaking the highs, this is a bad long entry. But a long one here, long entry here, and take it right before this zone. Doesn't really react, so it ends up going up, and probably you're going to take out the highs if I'm being honest. Yeah, so we push up, we pull back again. Long, long, plenty of long opportunities. This one was probably a break even at the very least. Yeah, break even or stop loss. I'm not really sure. But this is a much better trade than taking a small zone like this. But with that comes experience and context, and we eventually just zoom up, and there's your trade, 4R. This is the last trade I'm going to cover, but same exact stuff as we were doing before. 15-minute break, good impulsive move. It's not like it's hesitating. The zone would be this whole candle. Let's go on the 1 minute, and let's see. Alrighty, so we push down into the zone. We're respecting this sell zone right here. You can see us respect it. It's probably better on the 2 minute. Yeah, so the 2 minute sell zone would be this whole entire candle right here. And then on the 1 minute, break lower. Let's see if it's impulsive. You can break the low barely. Usually we want to see this a huge flush like this low just continues, but you can see that there's obviously buyers coming in because we didn't get that far. And so we end up tapping another sell zone right here. And so now I'm just monitoring this. And then you can see there's a buy zone right here. And so an aggressive entry would be something very quickly like this. We see we tap the sell zone. If we were going to continue bearish, we'd probably see continuation. We wouldn't see this candle form, or maybe the next one. Let's see what it is. Yeah. So the next candle is another hugely bullish candle. And so a long position, you could immediately take this. It's more aggressive than waiting for the break of the zone. But I mean, contextually, you can see that we're not seeing a lot of follow through lower. You see a bullish zone, it's getting respected. And if you look at all these other bullish zones, they don't really get respected. This is a buy zone. It just trades really closely through, and then there's not a ton of continuation. But because we have this higher time frame zone as well as this lower time frame zone, it makes a lot more sense to take this long than it would something like randomly right here. So this is the first kind of turning point from sellers in control to buyers in control. And then my stop loss would just be beneath the low, a little bit lower. I wouldn't want to see the zone get tapped too far lower just based on this. And then your TP could be something like this. I'm sure if we go on like the 15-minute. Yeah, so there's a 15-minute zone right here. So at the very least, your 15-minute or your TP should be something right here before this. And if we mark it out, it ends up being a 1 to 7.2 R, 1 to 1.72 R. And so if you did take the break of this zone, it wouldn't make a lot of sense because your stop loss would be here and your take profit would probably be around here at the very least. Other people can target up here. Again, 15-minute bearish zone, I'm okay with just taking it for this R. Play out the trade. What ends up happening is we tap the 15-minute zone, and then we go in completely the other direction. And so if on a lower scale, I mean, if you have the 15-second or 30-second, which I don't know if we'll be able to look at. Yeah. So if you wanted to then take the short immediately, you can see that there's a buy zone after we tap into it. We trade right through it. So you could be immediately entered right here. Stop loss above the sell zone. And then your other entry could be based on the 1 minute right here. Your scale in would be this. And then you take another entry right here on the retest of this right here. And then you could have caught to at least this zone, buy zone right here, buy zone right here, or maybe use this one if you wanted to. And then ultimately, I don't know if it continues lower or goes up. You can see we continue up a little bit off of this buy zone, but then we ultimately fail right here at the sell zone. So it almost hits your break even if you did have a break even. I tend to let the trade just kind of play out because it's too much to think about going break even at certain times and then getting hit break even and then being in the right move and all this other stuff. Last TP could be the lows. You can zoom out. You can take a TP beneath these lows. Like your take profits are going to be something you have to figure out. But let's just see what happens. See, price ultimately takes out the low right here and then reverses super aggressively. Where does it reverse to? This sell zone, and it's kind of just ping pong. And this is why, really quickly, this is why you put your stop loss a few ticks above, because if you don't, spread is probably 1 to 3 ticks, and so you potentially could have gotten stopped out on this big move when spread widened. And so this would be your trade. Here you go. Same exact stuff almost every time, looking for the same stuff, same zones, same sort of thing. It's not too complicated, but there is some nuance and some intuition and some context that does matter. Like at the beginning of the market, whether to long or short based on the 15 or 30 or 1 hour or whatever. Getting that bias in place is the most important, because if you're buying when you should be selling, it doesn't matter what boxes you draw, you're eventually just going to get slammed. Because I mean, we could buy all these buy zones here, stop loss. Buy zone here, probably a stop loss. Buy zone here would have worked for 1 or 2 or 3 R, but ultimately, if you have the wrong context, it's not going to really matter, and you're not going to be able to hit those high RR trades. So this is all the trades I'm just going to showcase, but it's pretty much the same thing over and over again.